end. This is going to be a very important video. I have a few indicators I want to show you guys that's going to give us hints as to where the price action is going. Before we get started though, please, if you haven't already, follow me on Twitter. Here's my tag. It's Jutsuko Toshiro. And if you guys like this content, please subscribe to my YouTube channel and like this video. So let's go ahead and get started. As you can see here, we have this Bitcoin price action. I mentioned a few things in the past. Number one is we have this nice bottoming formation, this U formation on the daily. And eventually I said if we consolidate enough, we'll break up to the upside. Now, I am a macro bear and I do have a bearish sentiment on the market. And I'm always telling you guys, look for shorts. The reason why is because we're still in a stage 4 downtrend. If you zoom out, you can see that the market has been hammering us for such a long time. We haven't even been able to touch this trend line and retest it, and I don't think we will for a while. We're in a stage 4 downtrend. If you really just zoom out, it looks like we just went straight down. So let's go ahead and take a look at the price action and see what's going on. We have a green day today, so everyone thinks that we're headed higher. Unfortunately, I do not think we are. So I have a few areas of resistance I want to point out. Number one is this trend line here. So you can see that if we drag this trend line, we have broken out of a kind of a tiny bearish descending line, and we retested it, came up a little bit higher, and it looks bullish, and it looks like we're going to go up. Everyone thinks that we're going straight to 18,300. This is the key area of resistance. Let me point out why. If you go on Twitter and look through crypto Twitter, you can see that people are posting this trend line here, and they're saying that we are going to come up and retest this line. And let me go ahead and draw a line to point that out a little bit more clear. So that people think we're going to consolidate and head up to 18.9 to 19,000, and that is going to be the key area of resistance before we head lower. So it's not a key question of whether or not we're going to go lower. It's actually where are we going to touch before we go lower. And I'm here to tell you, I don't think that's going to happen. So this obviously is pure speculation, but here's a couple good arguments for everyone that's watching this video right now. So watch it to the very end. I'm going to tell you why we're not going to head up to 18.9 thousand. There's a couple key indicators as to why. Number one, I want to point out one thing, and it's on the RSI. So let's go ahead and take a look. If you don't know what an RSI is, it's basically your relative strength index, and I like to look at it on the daily time frame. This tells you the ratio of buyers to sellers. One thing that you can notice in the past is when we were trading in this range up here, you can see that people were actually, if you go through crypto Twitter and filter everything out by days, you can see that everyone thought that we are headed higher. Everyone thought that we were going to retouch this $25,000 level, and I was here to catch this FTX crash. Here's the reason why I don't think that was going to happen, and I was accurate. Number one is you can see that the RSI finally got enough room to basically trap enough longs, and then we head lower. So we need that. Actually, we need the price action to go up before we go lower. I know it sounds counterintuitive, but if everyone isn't buying, there's enough people that aren't going to sell, and the support will hold. So if we trap enough longs up here, what will happen is we then get our capitulation event and we move lower. So unfortunately, people that do get trapped in these longs, they do suffer, and I don't want you guys to be one of those people. And the way I know that's going to happen is if you can just draw a straight line through the RSI. If we approach an overbought area, especially in the bear market, it is actually an excuse for the price action to go lower. What do I mean by that? So let's go ahead and look at the RSI here. We can match it up with the price action up here, and you can see that when we move up higher in the price action, what happens to the RSI is it ends up becoming overbought. Any excuse for it to be overbought will eventually lead to more selling. And I think that we're reaching that area here, and it's a key area to keep in mind that if we do reach high enough levels on the relative strength index, it's going to lead to major selling. One more thing I want to point out with the RSI is this is called a hidden bearish divergence. So let's look at the past and see what's happened before, so I can actually identify what a hidden bearish divergence is. Basically, what you have here in price action is a move up, and you can see here the price was 22,700 and the RSI was hanging around the 62 mark. And if you compare that to the price action before we capitulated, we had a lower price, which was 21,000, but we had a higher RSI. So in general, what that means is we had a hidden bearish divergence between this price level and this RSI level. I think that is what's happening here, unfortunately. So do not get trapped in these longs. And let me draw one more thing. Let me clear things up so you guys know exactly where we'll go lower. So let me clear these trend lines up. I want to show one more thing on the horizontal areas. So you can see here, this previous support ended up becoming resistance, and it came into confluence with the RSI. What do I mean by that? So here's our support. We bounced off this leg before we headed lower. And so the key area was 21,000 at that point. And as you can see here, it looks intuitive for us to test that level, get rejected, then go lower. And another thing that's in confluence with that is the RSI had a hidden bearish divergence. You can see here that that support, that resistance area was in confluence with the RSI. We ended up moving higher in the RSI. However, the price action was a bit lower. So this is called a hidden bearish divergence. Eventually, what that did was it led to the sell-off that happened. Now, that's what I want you. So history doesn't repeat, but it sure does rhyme. So let's take a look here. Let's zoom into the chart. Obviously, the price action is a bit lower, but let me point a few things out. Number one is we have this key area of rejection. We also have this key area of rejection on the RSI. We eventually came down to these lows, and now we're coming up to retest those levels. I think the key area of resistance is going to be this wick, basically this rectangle that I outlined for you guys, which is between 17.8 and 17.6 thousand dollars. And you can see here that the RSI is finally able to creep up, but history is repeating itself. So you can see that we had a high price volume in action here, but we had a low RSI. And you can see that here we have a lower price action, but a higher RSI. This is considered a bearish divergence and a hidden one. And I think that's what's going to play out. We're trapping a bunch of longs in these areas. Unfortunately, do not be a sucker of this. Wait for these levels to be tested. I have a feeling that this is going to lead us to that sell-off that we've been waiting for. What am I going to do in this situation? I am setting up a short in this area. This is going to be a 50x short. I am going to take this one all the way down to $15,000. Let's see if it works out. I'll keep you guys updated, but this is pretty much what I saw on the charts. I wanted to point this out to you guys. And if you guys want to back test this theory, add the RSI to your indicators and really just look at price action when it peaks and when it dumps. And you can see that there's a bunch of hidden bearish divergences that everyone is missing, especially when it comes to relative strength index. In a bear market, anytime you see a lot of buyers coming in, that is an excuse basically for you to sell. So do not be basically don't get trapped in this. We're not going to have a bear market rally just yet, but it is going to come, and I think it's going to come in the spring, not right now. So don't get trapped, you guys. If you guys like this video, please like my content, subscribe to my YouTube channel, and if you haven't already, please follow me on Twitter. This is my tag. It's Jitsuko Toshiro across all platforms. If you guys like these videos where I give you guys an analysis on indicators and where I think price action is going, please let me know. I strictly stuck with Bitcoin because obviously Bitcoin is king. Once Bitcoin is capitulated, I can guarantee that all alts will capitulate as well. Best of luck trading. Good luck. And like this video. Thank you so much.